talked about. We did some exercises, team building exercises that allowed you to come together and form your own economies. One of the things that I'm super proud of in the Black Business School that we're able to do that very few people actually do is we can show you how to create your own economy within your own family, and that allows you to operate independently of whatever economies out there. You can create something of your own, and so that was one of the exercises we did. So there's a lot of networking, people connected, and stuff like that. So it was really a lot of fun. We had a really good time, and I don't know when I'm going to be able to do another one. I know I'm going to do something in Los Angeles this summer because I made a promise to the people in LA that I would come back on a regular basis, but. Uh, I can't go around the country as much as I used to just because I got family stuff I got to do and stuff like that. But anyway, so if you want to fly to LA, I'll keep you guys posted. All right. So anyway, let's jump into it. All right. So how many of you have been following the debt ceiling negotiation? All the chaos that's been going on with that. Give me a yes if you have been sort of watching Congress make a fool out of itself as usual, where they are sitting around playing with your money and really messing up, trying to do everything they can to destroy the country. Well, the debt ceiling negotiation is something that you should be paying attention to. I hope that you guys are watching because it really reflects something that isn't really a problem, but it could become a problem. You know, it's almost like if your kids are playing and they start playing real rough, and you know it's not a big deal because it's just I don't know. It's just kids playing. But then they start playing a little rougher and rougher, and then somebody's getting thrown around the room, and then eventually you say stop because somebody's going to get hurt. So they're up there playing because they're very immature, and they like to negotiate up until the last minute. They always like to prove to their constituents that they're tougher than the other side, and that they're willing to burn down the whole building in order to get what they want. And so effectively, this game gets played on a regular basis. This is the game that's being played right now. It typically ends with both sides eventually coming to a compromise and the country moving forward without defaulting on its debt. The problem now, though, is that the United States is being seen more and more as a dysfunctional country. Around the world, there are people that just look at the U.S. and they say, "Gosh, what a bunch of clowns! These people are stupid. These people are absolutely ridiculous. They don't know how to get along. For if their life depended on it, and they're going to end up destroying each other." And so, effectively, what you're seeing is you're going to also see a decline in confidence in the United States in terms of leaving the dollar as a reserve currency, having other countries have faith in the United States' ability to kind of be the economic grown-ups in the room. We have the strongest financial markets on earth, the most liquid, the most efficient, the deepest markets. That's why everybody swims in the U.S. Financial lake. That's why everyone wants their money here because we have the enormous ability to create tremendous value by creating some of the just extraordinary financial markets. Whereas China can't really do that because they're kind of hamstrung by communism. The government wants to control everything. Well, one of the benefits of the freedom that we have in the United States, at least in some areas, is that we just have better financial markets. The Chinese government wants to control everything. So the debt ceiling is something that you want to pay attention to for a couple of reasons. One thing, I was doing research on this in terms of the types of stocks that could be hit hard in the event that there's a debt ceiling issue. Some areas that might get hit are things like banks, anything that's affected by interest rates, pretty much. Because if the debt ceiling issue does not go away and they default on the debt, then you're going to see a spike in interest rates, at least temporarily. So banks would get hit hard. Real estate companies will probably get hit pretty hard. Utilities have to go borrow money in order to function. They borrow money from the government in a lot of cases. They would get hit pretty hard. You would also companies that need credit that have to just borrow in order to stay alive would probably get hit pretty hard. And so and really anybody that's heavily dependent on government contracting is going to get hit pretty hard. So these are some of the companies that might get body slammed if there's a debt ceiling crisis. Now, one theory is that it's going to be fine. It's not a big deal. There's another theory that says that it could be not so fine, and that it could actually become a true risk factor in the economy. I'm not in the second camp. I think that they are going to come up with a compromise, and I think that if they don't, here's the point. Here's where you can make money. If they don't come up with a compromise and they end up defaulting and everything ends up crashing, or they just, they get dysfunctional and it goes down to the wire and stocks decline as a result. Some see that as a buying opportunity. Some see that as just, a temporary dip in some otherwise excellent investments that, where you might be able to buy that $50 stock for 45 bucks for about 2 days, and then it goes right back up to 50 once they announce that the debt ceiling negotiations are over. You're definitely, in my view, going to see a pop in stock prices once they announce that they made a deal. I believe they're probably going to announce that they're going to make a deal. So if you're positioned carefully, you can do well. Maybe if you have cash to the side that you can end up, deploying in the event that that there's a temporary dip or that something goes wrong, that might work. Or if you're just investing consistently and you're just kind of like, okay, I'm just going to wait this out, I don't care. There's a good chance that you're going to see a pop in your stocks. A lot of you are already making money right now. Give me a yes if you're already making money. Now, what specific stocks should you buy? I have a list of stocks for you. Just log in at theblackbusinessschool.com. If you go into what Dr. Boyce is buying, I made a full list for you guys for this week. As you guys know, one benefit of being in the stock market investing program is every week I find at least 5 stocks for you that, based on my research, are good companies to invest in. I'm going to review a couple that you guys asked me about, but then there are others in there. So one of the benefits of being in the class, I let a lot of people watch from outside that are not in the class. But the benefit of being a student is that I give you extra value because you're obviously invested in the Black Business School. So I go a little bit above and beyond. So you have access to all the content that we've created over the last 5 years. You have access to all the stock picks over the last 2 or 3 years. You also have the ability to send me your questions. I'll specifically look up your investment. So if anybody ever wonders what's the difference between being in the class versus being outside the class, is that Stock Market Tuesdays, I'll sometimes broadcast pieces of that to the public so everyone can see that I know what I'm talking about. I'm not here to rip you off. I'm not here to do anything sneaky with anybody. But at the same time, there are private spaces where students can go to get the extra value, because why would I give the same thing to everyone else that doesn't support the school that I do for the students that support the school? Because we need your support. We are building the Harvard for Black people, the Black Business School. 95% of you, when we did a survey, 95% of you said you learned more from us for just a few $100 than you learned, in college. And some of you spent $100,000 going to college. This is not by luck. This is by design. This is because we have college professors that we work with. I'm a college professor. I know what you got in college, and I know that it didn't work for you. And so effectively, that's what the Black Business School does. Is it's a true HBCU in the sense that we're not hamstrung by anybody. We can say whatever we need to say, do whatever we need to do. And also, our models are designed specifically to solve one specific problem, and that is the racial wealth gap. So everything we do is designed for Black people. So we have some people in there that are not Black, because why? I mean, just for the same reason a Black person would go to Harvard. If you want an excellent education, I don't care if you're not Black, you can come to the Black Business School because we are the leaders. We're better than everyone else. But at the same time, we focus what we do on the Black community. That's it, period. So not to go into that spiel, but I want to explain that in case you're confused or wondering, like, okay, what's really going on here? That's what we do. All right, so let me jump in. You guys sent some questions, and as I answer some of your questions, I want to also mention, in general, right now, I'm super excited about this market. This is what I've been talking about, like, for the last year. You went through hell. You really went through a tough market. The Fed was increasing interest rates constantly. It was killing stock prices. And those of you that held out, that consistently invested, you're probably seeing some green in your portfolio now. I know my portfolio has probably increased by 20% in the last 3 months or something. Because I took some, and I told you guys about some of the long call spreads I took in companies like Amazon and Chipotle, and now those are coming to fruition. I made several $1,000s from Chipotle, several thousand from Amazon, a few thousand from Microsoft, right? A few thousand from Facebook, Netflix, all these companies where the stocks were depressed. And this is easy. This is not hard. This is very easy to do, in the sense that, if you, first of all, the reason I say it's easy is because it's very easy if you, number one, stop listening to people who don't invest, because they don't know what they're talking about. They're going to tell you to run away when prices go down. And actually, you should be running toward the market when prices go down, not running away. So when I saw Netflix stock get cut in half, I bought a ton of it. And then as Netflix started to recover, I was able to make money from that. The same thing with Facebook. When I saw that Zuckerberg was down, I know that his team is smart. They know how to make money. They're going to pivot. They're going to adjust. The economy is going to change. So I bought a ton of Facebook while it was down. Now it's back up. The stock, I think maybe it was an 80% return or something. So $100,000 investment becomes $180,000 or whatever, right? 10,000 becomes 18,000. So effectively, you're now seeing the good side of that. You're seeing the bright side, and the best part of it too, though, is it's not too late. Every indicator I am seeing right now says that 2024 is going to be awesome. 2024 is going to be a great time to be in the stock market. So you're not late. You're never late. Like never ever like let anybody convince you like, oh, it's too late to. That's crazy. There were people in the 1980s who thought they were too late. Oh, it's 1989 and the market's already gone up and there's nothing left. No, there was plenty. 1989 was a long time ago. So 2023 is a long time ago if you compare it to 2063, right? So effectively, get in the game. You have to get in the game. If you don't get in the game, then you won't benefit from the game. All right, so let's keep going. Let me dig in. Let me answer some of your questions. Brandon Turner is asking, I was able to purchase 4 of the 5 stocks from Dr. Boyce is buying from May 15th picks. Okay. You tried to get Airbus and you said it was not available on Robinhood, Vanguard, or Cash App. Yeah, that stock is not available everywhere, but that was one of the picks based on my research that I liked. So if you go to like an E-Trade or a Fidelity or a Charles Schwab, you might find it there. You won't find it on Robinhood, I don't think, because Robinhood does not list as many stocks as like E-Trade does. All right, let's see here. The next question is for Jabbar. He's asking a question about BMOT from our investing workbooks for kids. Okay, and you're talking about ROI. What's the formula for ROI? And the formula that you wrote in here is not the ROI formula, actually. So maybe there's a typo that I need to go look into. We have financial workbooks for kids. If you want to take a look, you can go to financialworkbooks.com. That's financialworkbooks.com. So if you want to train your kids on economics, we spent several years developing financial workbooks specifically for Black children. We didn't design them for anybody else. So feel free to go to financialworkbooks.com and take a look. But the formula for ROI is simply profit divided by the cost of investment. So if I spent $1,000 as an investment and I make a profit of $200, my ROI will be 200 divided by 1,000, which will be 20% return on investment. So yeah, so sorry for that mistake. So instead of it being profit minus investment, cost of investment, it should actually be revenue minus cost of investment. That gives you profit. So my apologies for that. I'm going to have my team look into that. Austin Hawkins, I think I made a mistake on the ticker, similar to the previous question. OCSL, Oak Tree Lending. Oh, you're asking me about Oak Tree Lending. Yeah, I looked up Oak Tree Lending for you today, and I love it. It's a great stock. I would buy it myself. I just have my money's deployed into other stocks, but yeah, it's a good. I like it. It's a good investment. It looks like a solid company. So yeah, so there we go. So there's your short answer to that. Would Dr. Boyce buy that? Yes, he would. Um, in fact, let me see. I'm gonna write it down. So, by the way, if you want to see what Dr. Boyce is buying, every week when I give you the list of stocks, just log in at theblackbusinessschool.com, theblackbusinessschool.com. Search for what Dr. Boyce is buying, and you can get access that way. All the stock market class members have free access to that. So I do that every single week in case you just want to follow along with the companies that I like. These are companies that I would buy. Like sometimes I take all my money and I just buy stocks as a hobby. So I'll get, let's say I get an extra $5,000, an extra 10,000. It typically all goes into the stock market or some other investment. I don't buy stupid stuff. I don't buy shoes and clothes anymore. I have enough shoes. I have enough clothes. Or cars are not a good investment. So when I get extra money, I buy assets. And that's in that behavior pattern, that habit, that's a good economic habit for you to develop. That's what wealthy people do. Wealthy people just accumulate stuff. They're kind of like financial hoarders, right? So if you want to be wealthy, one habit to get into is just I want to own things. I want to control things. If you watch, I don't know. Like I was watching Godfather of Harlem last night, and Bumpy Johnson and Malcolm X is a great story. It's really interesting to watch, and it's interesting to watch them just sort of accumulating things. They accumulate territory and they accumulate trade routes, and they have this team that kind of helps them go and flip money, make investments, and they get the drugs and they sell them or whatever. Now, selling drugs obviously is not a good thing. We shouldn't glorify drug dealing, but at the same time, it's like, there's a way that wealthy people kind of operate, and I encourage you to kind of pay attention to that. It's a lot of it's very cultural. It's not just, there's a lot of wealthy people who never went to college. There's a lot of wealthy people who never studied finance. There are people who built independent wealth who don't know anything about business in terms of buying, or they don't know a lot in terms of business in terms of the formal stuff, but they understand what it means to acquire something and control it and keep it and then utilize it to get what you need, right? So pay attention. It's a lot of it's very cultural. So let's see here. Natasha White. Good morning, Dr. Boyce. My 18-year-old niece, which is in her first year of college, said that for her birthday this year, she would like some luxury items from the brand Lanvin. I never heard of Lanvin. How do I make sure to let her know it's okay to like nice things, but to not get caught up in the materialistic trap? Um, I think you could just tell her one time and and kind of talk about maybe balance, right? One of the things that I really want to make clear, and because a lot of people think that because I talk about investing in wealth building, that I believe you should never buy nice stuff, and that's just not true. I think you should definitely buy nice stuff. I mean, why wouldn't you want to enjoy your life and enjoy your money? I think it's all a matter of whatever your taste is. Like, do what you love, do what you want to do. The only thing that I recommend is knowing what balance looks like. And balance means that if you get an extra $5,000 and then you go spend an extra $5,000, then you know you're going to end up going broke because you're bringing your money in and then you're spending it and then you're broke again. And then you have to go sell yourself into slavery in order to get more money just so you can pay more bills and throw your money away again. And that's not what money's supposed to do. That's not what you're supposed to do with money. You don't want to get this financial diarrhea where you're just taking it in and it's going through and you're taking it in and spitting it out, taking it, spitting it out. Diarrhea will dehydrate you. So the financial diarrhea will financially dehydrate you. Money's called liquidity. So dehydration means you lack liquidity. So effectively, if you engage in financial diarrhea, you will be dehydrated, financially dehydrated. You won't have any liquidity, which means that you won't have access to money when you need it. That's the point. And so I would say this. It's not a matter of saying like don't buy nice stuff. I know most wealthy people. Jay-Z and Beyonce just bought a $200 million house with cash. I'm sure it's very nice. And I'm sure that if you look at what Beyonce's wearing on a given day, she's probably not wearing Walmart clothes, right? So nice stuff is not what keeps you broke. It's a matter of balance. Do you have balance? If you have balance, then you're fine. Just okay, I'm going to take 20% of my money and do whatever. And then the other 80%, I'm going to put that into something constructive. And it's like even with NBA players, and all the money that they make, I always say that, gosh, if they were smart, they have so much money that they were smart, they would make a deal with one of their parents or somebody they trust that says, okay, if you're making $3 million a month, then you can have 20% of that money well after taxes. So let's say after taxes you're making 2 million a month or whatever. Let's do it like that to make the math easy. 20% of that money you can do whatever you want. So out of that 2 million a month, you can take $400,000 a month and just act a fool with it. You can waste it. You can throw it in the garbage. You can take it to the strip club. You can buy Bugattis with it. Whatever you want to do with that money, that's fine. But with the other 80%, we're going to invest that. That's the deal Shaquille O'Neal made with his mother when he first joined the NBA. So Shaq had nice stuff. He had a big Mercedes with the Superman logo on the front of it. I remember that. So he had nice stuff, but he had balance. His mother and his father gave him balance. So he was investing while he was also enjoying his money. Never let anybody make you think that to be a good investor, you can't enjoy your money. That is simply not true. That's like saying that in order to that you can't lose weight and be fit and still eat ice cream ever. Like you can never ever eat anything good. You always have to eat vegetables every day. That's not true. When I went to college, they made me think that if you want to make good grades, you can't go to any parties. Like if you go to any parties, you're going to flunk out of school. That's stupid. That's just not true. I my sister went to every party on the entire campus and even went to parties on other campuses. But the difference was she would study before she went to the party. So she was, if she had a party that started at 6, she would get up, go to the library at 10 and study from 10 till 4, go home, take a nap, get dressed, and then go out at 6 and be out all night long. So it's not the studying that made my friends drop out of school. It was when you're not, sorry, it wasn't the partying that made my friends drop out. It was when they did not study between the parties. That's what got them in trouble, right? If you look at your time, and just thinking about investing, managing money is the same as managing time, right? So basically, the biggest thing that I ever did to help me succeed was I realized when I was 19 that there's 168 hours in a week. This is one of the epiphanies that helped me become the number one undergraduate student on the entire University of Kentucky campus. I won a Wall Street Journal award for being the top finance student, and I was also the number one black student for my whole 4 years I was there, which was very surprising to me because I never made good grades in my life. My grades in high school were absolutely horrible. But the one thing I figured out was I said, wait, there's 168 hours in a week, 24 times 7. So if I sleep 8 hours a night, a full night of sleep, 168 minus 56 gives me 112 hours. If I go to class for 15 hours a week, 112 minus 15 gives me 97 hours left. And then if I study, I could study, say, 40 hours a week, right? Which is like, I don't know what, 5 hours, 6 hours a day almost. I could study 6 hours a day, and that 97 minus 42 would be about what, 55. So I still, even after all that, have 55 hours to do whatever I want. So I would take that 55 hours and I would spend 30 hours working a job, or 40 hours. I worked full-time job when I was in college, and I made straight A's, and I had a triple major, and I got 2 bachelor's degrees in 4 years. I could have got 3. I just got a little bit lazy in my senior year. I'm not making this up. And everyone was baffled by how I did so much. They were like, wait, how are you making the highest grades? And I see you on the basketball court, or you have more money than everybody because you're working 2 jobs. It's because I figured out how to manage my time, and I created my system without deferring to other people and how they did things. I was a little bit of a loner, so I saw problems alone. I wasn't overly influenced by bad culture. So I didn't watch, what the other black dudes were doing, when it came to how they studied, because a lot of my friends, to be honest with you, they didn't study that well. I was friends with them. I would play basketball with them, hang out with them a little bit, so I was in it, but I wasn't of it. So if I saw guys that were drinking too much and wasting time and acting a fool on campus, I was like, I don't want to do that, because I grew up in a family where there was personal responsibility, and if I get in trouble and I get kicked out of school and have nowhere to live, nobody's going to come save me like somebody's going to come save you. So that discipline, and I share these stories because I want you to understand the stuff that goes outside the lines. When you talk about investing, it's not just like this magical thing about knowing, what stock to pick, or how a 401k differs from an IRA and all this other stuff. That's important. But you can know all those things. But if you have bad culture or just bad value systems, you're not going to be successful. You're going to fail, right? But if you have the right value systems, you're going to figure out what you need to know to put yourself in whatever position you want to be in. So anyway, not to dwell too much on the college thing, but literally when I figured that out, like I was like, oh, 168 hours a week. Okay, so I can do this and do this. Oh, I can still go to parties. I can still do whatever I want. I have all this time to study, and it's 6 hours a day. Think about this. If you're a college student studying 5 or 6 hours a day, you're gonna blow everybody else out the water. Because I would have the whole, between tests, we would read like 3 chapters or something, or 4 chapters, and get tested on it. I would read all 4 chapters the first week after the previous test. So I looked like the smartest kid because I figured out, wait, if I read everything in advance and I come to class and I already know the answers, my teacher's gonna think I'm smart, which I wasn't. I just prepared. So like to this day, I get our 12-year-old, I tell her, I say, what are the 3 P's of success? And she'll say practice, preparation, and persistence. And then if something goes wrong, I'll say, okay, which of the 3 P's did we violate today? And she'll say practice, or whatever, or persistence, right? So ultimately, these are things I believe, and these are things I think will play out for you as you're trying to, become rich, successful, famous, whatever you're trying to do, right? Just stick to your values and go hard and let go of bad culture. All right, so let me keep reading here. Let me talk a little bit about something I was thinking about today with AI. AI is emerging as this powerful technology. A lot of AI stocks are AI companies are going to just be making money hand over fist. It's really stimulated the market tremendously because AI is kind of like this. It's practice, preparation, and persistence. That's what it is. Juiced up Reese. See, that's another one right there. Juiced up Reese. That's a bad black woman right there. She has a great business. But anyway, so um, so AI is interesting to me from an investment standpoint because AI has kind of opened the door for this really extraordinary economic boom that's kind of happened in the middle of a recession. Like, so AI just pops out of nowhere, and suddenly AI is kind of driving the economy in all these extraordinary ways. And AI companies are able to go raise money in an environment where it's very difficult to raise money. And I don't know, give me a yes or no if you've been following AI. Give me a yes if you've been kind of paying attention to the AI tools that are out there. I think you should. I think that that's a good practice to get into. There's so many of them now. It's kind of crazy. Well, anyway, and if you want to invest in AI, I have a list of AI stocks I'm investing in right now. If you just go to boycewatkins.com, there's a list there. Just go to my website, boycewatkins.com, and the list of AI stocks is right there. But anyway, so with AI, what's interesting is not just that AI is a great economic opportunity, but I was curious about the threats of AI, right? Because I don't know if you saw this week, there was a fake AI generated photo of the Pentagon on fire that was distributed, and it caused the stock market to crash, like for about 2 3 minutes, maybe 5 minutes or so. I don't know how long it was, but until they figured out that the photo was fake, the stock market crashed. So literally, about $200 billion in value was depleted just like that, from this fake picture. And here's the thing, it wasn't just, somebody messing around. It wasn't some teenager just trying to be funny. This was a specific strategic attack. And the reason I believe it was strategic is because one of the accounts that tweeted out the AI picture was connected to RT News, which is a Russian government backed media agency. And then there was another fake account that was pretending to be Bloomberg that pushed out the image too. But it wasn't Bloomberg; it was a fake account. So they pushed it out to millions of people. And so these attacks are going to continue. They're going to get more sophisticated. It's going to get really messy. They can clone the voices of people now, right? So some of the scams are getting just really elaborate. Like one lady said she got a call from her brother saying, "I was in an accident. I need some money. Can you send me some money and send it here?" And just something like that, and it sounded just like her brother, right? So effectively, AI is just changing the world in so many interesting ways. So I was really curious to see, like, what are the threats of AI? What are the ways that AI can really really do damage to society? So I did some research on it, and there was a guy who worked for Google. I don't have his name in front of me, but he was they call him the godfather of AI. So obviously he's important, and he worked at Google for a long time, and he quit Google so that he could go and talk about the dangers of AI openly. And one of the things that he was speaking about was a list of ways that AI could just be a huge threat to society. So I'm gonna give you that list real quick, just so you can kind of be aware of how things are evolving. He mentioned fake news, obviously, polarization. The AI can be used to cause people to just fight like cats and dogs, which is already happening. You're already seeing this everywhere. He talked about inequality, economic inequality. He said AI is likely going to be a tool used for the rich by the rich, and their goal is to eliminate the working class from their positions, right? So effectively, you have companies like Amazon. I think Amazon buys 1,000 robots a day. 1,000 robots a day. Now I want you to backpedal a little bit. Does anybody remember Amazon was having a lot of labor disputes? The workers were trying to unionize. They were complaining about the working conditions. They were saying we don't have time to go pee, and Amazon doesn't, treat us right. Well, Jeff Bezos and his crew, they're very much into AI. They're on the cutting edge. They're very much into technology. I would bet every nickel in my bank account that they are doing everything they can to say, how do we eliminate the human element in our production process? How do we minimize the number of human beings that are going to be whining to us about going to the bathroom or getting days off or working conditions? And so they're going to replace a lot of humans, probably hundreds of thousands of people, with robots that can work 24 hours a day, that will never ask for a pay raise, that will never ask for a bathroom break, that don't care about a lunch hour or anything like that. So I'm not saying it's good or bad. I'm saying that this is what's probably coming. So one thing I reiterate to you is, I would keep investing. If you have any extra money at all, I would keep investing in the companies that are going to make money from this AI, because it's gonna increase economic inequality. This is what the expert said, the godfather of AI. Also, he talked about something, this sort of threat of what he called referred to as super intelligent AI taking control away from people. That at some point, there'll be some AIs that's just super smart, that can manipulate people like crazy, that eventually just takes control of everything, and it concludes that human beings are just worthless and stupid and need to be eliminated with a nuclear bomb or something. And he talked about, it's something that I still have to research this to understand it, but he said that in the human brain there's about 100 trillion neural connections, and but we use about 30 watts of power. I don't know exactly how that translates into brain power, but about 30 watts. He said that a lot of the AI connections would use actually a megawatt of power. So I guess a megawatt would be about 1,000 watts or something like that, something close to that. So literally, 30 times more power in terms of, now they have fewer connections, fewer neural connections, about a trillion versus 100 trillion. But you're talking about a lot more brain power being applied. And he just feels like that could be very dangerous, especially when you put that AI in the hands of players that are just not interested in doing the right thing. Where's this gonna go? I don't know. There's movies about it. There was a movie I watched one time called Mother, where this little girl was being raised. She was raised since she was an infant by a robot, and she didn't know any different. She just know that she knew that she was just on this spaceship by herself, and this robot was her mother and did everything that a mother did and talked to her like a mom, and because she was AI, and she thought that was her mom. And then through time she finds out that that things are not normal. Like she finds out that, like, for example, her mother did stuff that was really logical but wasn't ethical. Like, in order to get the perfect embryo, she was selected as the perfect embryo. But to get the perfect embryo, it's called I am mother. Maybe that's what it is. Yeah, thank you for correcting me on that. But yeah. So she literally went through like 1,000 fetuses and just killed them all. Like, would incinerate all these fetuses to find the one that was really perfect. And then there were other conclusions that they'd come to that just said, human beings suck. Let's get rid of them. The world would be much more efficient if we got rid of them and started them over and trained them to think in a certain way, right? So that they'll be more peaceful or whatever. So to do that, we got to get rid of the bad batch and bring in the good. Almost the way we think about chickens. If you have a bunch of chickens that have bird flu, well, what do? If they're all diseased chickens, they kill all those. They just slaughter them. They slaughter 1,000 chickens, so they don't care. They're not thinking about the life of a chicken from an ethical standpoint. They're just like, okay, let's just clean it up and get a new batch and everything will be fine, right? So effectively, they're claiming he's claiming AI could do the same thing. I don't know, man. Hopefully I'll be dead by then. I don't want to see none of that. All right, so let me answer a few more of your questions here. Michael Watkins is asking, when using a stop loss, what percentage of the loss should people use? Is it off of the purchase price or off the existing price? Well, if you do a stop loss, you should pick it based on the existing price, not on the purchase price. So a stop loss is a type of order where you basically say, if the stock moves by this much off the existing price, sell that thing. Or or you could do limit orders where you say, if the stock goes up to a certain price or down to a certain price or whatever, buy X number of shares, right? So you can kind of condition your order based on where the price is. A stop loss will be put in place maybe if you made a bunch of money and you want to protect your win, right? So you might say, okay, I made a 40% gain on the stock. If it drops by 5%, then sell it. right? Just, that way I can lock in my gains and get out of the game without losing. Should people use stop losses on their lifetime stocks? I don't, but you could. I could see that being logical. Just kind of saying, if it's too bad, if the stock is too crappy, I'm gonna just get rid of it. If it has too bad of a month or something, I don't want that stock in my portfolio. I don't think there's a problem saying that. Let's see here. Wallace asks, he says, when creating a covered call and selling the potential upside for income generation, how often can you sell the call option against the underlying stock? Okay, so you used the example in the previous video using Tesla to generate $7,000 a month. Yeah, okay, so that's a question, Wallace, for the Prime program, where we talk about selling stock options and generating income. But what I'll do is I'll answer that now. There's no set time to do it, right? I sell my options every week. Every Monday, that's my payday. That's when I go in and I sell my options and I get the cash and I use it for whatever, right? So you could set that kind of cadence, or you could do monthly if you want to, if you want like a bigger amount of cash available. And remember too that when you talk about selling stock options, it doesn't really work for every kind of company though. Some companies selling stock options doesn't generate a lot of money. The ones that do generate the most money tend to be stocks that have the most volatility. So the thing is you have to find ways to manage that risk and cap off that volatility, or it'll punch you in the stomach when the stock goes down too much. But as far as like frequency, it's up to the individual. There's some people who do it even more frequently than a week. I don't, but I do weekly. I like weekly because it just feels consistent. So anybody who wants to dig into that more, I did a little training on this. You go to my website, boycewatkins.com. There's a training called How to Make Money Without Working. So feel free to go take a look at that. I'm a big believer in selecting the right stocks and selling options on those stocks as a way to generate income without having to actually do anything. That's because that's what I do with my own money. So feel free to go to boycewatkins.com. It's called How to Make Money Without Working. Emily Max Simmons, Skisco Gold Royalties, or OR. Are you familiar with the stock? And what does it mean when you use limit orders when buying stocks? Okay, so I'll answer the second question first, and then I'll go to the first question second. Okay, so what does it mean when you use limit orders? Okay, so we talked about that. So if I have a limit order on a stock, like if I want to buy Google, but Google's priced at, I don't know, let's say it's $100, and I don't want to pay $100, I can put in an order that says, if this stock goes to 95, buy 100 shares. So that's what a limit order is. It's like, okay, I'll buy it just in case. Or you could also say, um, I don't want to buy it for more than a certain amount, right? So you can kind of say, if the stock's 100 and you want to buy it now, you might say, I'll buy it as long as it's not above 102 or something like that, right? So limit orders just kind of put guardrails on your purchase, in the event of a buy, right, or a sell. Now that company, Skiko Gold Royalties (OR), I did look that up for you, Emily, and I do like that company. The ticker symbol's OR, and it looks like something that I would buy. So I was impressed with that. All right, so everybody who's in the Zoom, if you have a question, you can put it in the Q&A section, and I'll look it up. If it's for a stock, I don't have the ability to look up stocks and research them like right now on the fly. So Johnny, what you can do is log in. If you log in at theblackstockmarketprogram.com, THE, theblackstockmarketprogram.com, you can look for the little thing at the top of the curriculum section, and you can leave a question for me, and I can go and dig in and research that. Okay, so let's see. Miss Hitchcock says, I applied to be a panelist at the All Black National Convention. Should I buy a ticket or wait to see if I'm selected? Well, I guess, yeah, you can wait and see. Maybe that might be a better approach, right? And anybody who wants to apply to be a panelist, we're not going to pick that. We can't pick that many. We kind of, a lot of the slots are filled. But, yeah, with the panelists, we'll let you in for free for sure. And you can go to boycewatkins.com to learn more, or allblacknationalconvention.com. The convention, the All Black National Convention, in case you don't know, it's where we all get together and we just do Black people stuff in a very healthy, positive way. We have lots of panels and workshops on everything from family to wealth to crypto to, to politics. And it's always a lot of fun. And it's like a big family reunion. And it's going to be in Atlanta this year, October 20th. So you might want to mark that on your calendar if you'd like to join us. It's really a blast. So you can learn more at allblacknationalconvention.com. allblacknationalconvention.com. All right, so let's see here. What do you think about Alibaba and other Chinese companies? Asked Robert. I don't have anything on top of mind when it comes to Alibaba. I'd have to research the stock. You can leave it for me for next week, and I can look into it. Right now, I think China. I kind of stay away from China, to be honest with you, because there's just so much uncertainty there. There's the risk that we might go to war with China, and I don't want to. I don't want to own stock in a Chinese company. On the day that we decide, we want to bomb somebody or something like that's going to just be terrible. And I got burned really bad on the Chinese investment. There was a company called Tekadu that I bought, and I just wanted to sell the options on the stock, and I made a lot of money on that stock. It was like an ATM machine. And then the Chinese government, just out of the blue, decided that they wanted to shut down the whole industry. It was an online education company in China, and they decided that children were too stressed out with online education programs and after school programs. So they just shut them down and made them into nonprofits just like that. Like you can't do that in the United States. So when they did that, it killed the stock. The stock went from $31 to 3. I'll never forget it, and I was so mad about that. And fortunately I had made enough money from selling the options that I almost kind of broke even, but it's kind of like I didn't want to break even. It's like being in a basketball game where you think you're going to win by 30 points and you end up winning by one point on the last second shot. So it taught me a lot about, or reminded me, because these are things I kind of already knew. It reminded me a lot about investing in China, how things can change quickly. Also, making sure your put options are in place. And if I had taken some of that money and just bought some really strong put options, then my losses would have been much lower because the put options would have reversed a lot of that loss. Let's see here. So in terms of, y'all gotta forgive me. I apologize for the sniffling. My allergies are kicking my butt today. I don't know if the pollen count's high or not. Um, so I'm looking here now. One thing about Alibaba, it's funny you mentioned Alibaba, is I just saw an article here as I'm looking at CNBC that says they're going to cut 7% of their workforce to pursue an IPO for that division, or sorry, in the cloud unit. Okay, so Alibaba, I remember their CEO was having trouble with the Chinese government. To the point where I thought they were going to lock him up or something, and he was like hiding for a while, or had disappeared or something. Jack Ma, and so the Chinese government's really big on not letting companies get too big, and so Alibaba was on its way to kind of becoming the Amazon of China, and they just stepped in and were like, no, we don't want you to get that big. So these are the little things that the Chinese government does that makes investing in China somewhat risky. I think though I did put together a list. I do own some stock in China though, or in Chinese companies, right? And I tend to be a long-term investor, so I didn't really mess with it, but I didn't add to it. So let me see here. I think that if you go to drboycechina.com, there's a list of Chinese stocks that I like. So I don't remember everything that's on the list, but I remember I liked the list when I put it together. So feel free to go to drboycechina.com and you can find the list of Chinese stocks that I've invested in myself. And in these positions, I'm still holding them because I'm just a buy and hold kind of guy. Um, Let me see here. I'm looking to see what else is in here. Microsoft's bringing an AI chatbot to data analysis. Okay, that's interesting. So Microsoft is kind of one of the big leaders in the whole AI space. They kind of made it super competitive, which is one of the leading debates in AI. Also, is whether or not it should be open source or not. There's a company that kind of competes with the Chat GPT company. The company that created Chat GPT was it called OpenAI? Is that right? And then there's like another company called oh gosh, I forgot what it's called. But the guy wants AI to be open source. So that's going to be an interesting kind of development. Also, how they regulate AI is going to be really interesting too. Now, one thing in terms of a stock um, that I mentioned that I like that I just bought. I'm trying to remember what it was because I see the companies and I like them and I just buy and then just hold and whatever. So let me see here. Okay, so one company that Goldman Sachs likes is a company called Quanterix Corp. And the ticker symbol of Quanterix I'm looking here is let's see, what's the ticker symbol of this company? Uh, Quanterix. The ticker symbol is. Give me a second. I'm gonna find this. Hold on. Why is my machine moving so slow? My connection's bad or something. Sorry, it'll come up in a second. Here we go. It's QTRX, and Quanterix is a Nasdaq company. Now, one thing that's interesting about Quanterix though is that this, if you buy it now, you're going to be buying at a premium relative to what you could have bought it for yesterday, and that's because whenever a company like Goldman Sachs endorses a stock, the price goes up because everyone's like, oh, Goldman Sachs likes it, so it must be good. So then, because everyone believes that, they start buying the stock, and when demand goes up, the price goes up. So a way to kind of approach that might be, let's say that you conclude, wait a minute, whoa, the stock just went up. I think it went up 15% in one day. So you could, if you wanted to, put in a limit order, right? The stock is trading at 22.30. If you believe that there's going to be a bad day in the next week or two, or next month or whatever, where maybe all the stocks just drop because of some sort of macroeconomic event, you might put in a limit order for like 20 or 19 or something, right? And the reason that that might be a good strategy if you don't want to pay that price is, well, it's risky though, right? Because this could be the beginning of something big. The stock could be on its way to the moon, right? It could, be $40 in a year or something. But what tends to happen that's real interesting is when the stock market creates buying opportunities is there are days where all the stocks kind of get swept up in the same economic information, where they all get kind of treated the same. They call that systematic risk in investing. And systematic risk is just like where it's just bad for everybody. It's like if we're all outside and it starts raining, we're all going to get wet, right? And some of us get wet, more wet than others. Like if I have a raincoat and he doesn't, he's going to get wetter than me. Or if you have an umbrella and I don't, then I'm going to get wetter than you. Maybe if how wet we get might depend on where we're standing, what part of the city we're in, how long we stay out in the rain, right? All these factors might vary in terms of how the rain affects us, but we all end up getting wet. So when a macroeconomic event happens, like the Federal Reserve decides to raise interest rates, or something just changes, like the debt ceiling negotiations go bad, what can happen is like all the stocks just get cratered and hammered, right? So what that does, though, in my view, is you got to remember there are some companies that are just bad, but then there's some companies that are good companies that just got caught up in a bad situation, right? Just systematically. So those might create buying opportunities, where you can go in and buy that stock cheap. And then when the macroeconomic news gets better, those stocks will, continue to rise. And maybe they'll even rise further than the mediocre stocks that are out there. So if you believe so when I invest in a company, I tend to just sort of look for companies that are just good companies that know how to make money in a variety of economic conditions. Like, so for example, I always talk about Chipotle. I just like Chipotle because they're just smart. They just whoever's their team is and they're bored, they just know how to keep making money. They make the same damn tacos and burritos or whatever the hell they make as everybody else. Like I've been to 1,000 restaurants with food just as good as Chipotle, but for whatever reason, people love Chipotle, which is crazy to me. But they're just good at that. So when the market was down, I put a bunch of money into a big fat position on Chipotle, and I made a ton of money because I knew that the market was eventually going to reverse itself. How do I know that? Well, because that's what the market has always done. All the years I was at Syracuse in my PhD program, all I did was look at stock market data every day, all day long, 10 hours a day for about 12 years, 13 years, literally. That was the 13 years where I was on the faculty at Syracuse. I'm not even including the several years while I was working on my PhD. That's all you do. And the biggest trend that consistently shows itself is that the market just it reverses, and then eventually, so when it drops and it goes low, everybody panics, and so many people sell when at the absolute worst time to sell, and then it stays down for a while, and then everything passes, and then it starts going back up again, and then it continues its upward trend. If you look at the long-term trajectory of the market, what you'll generally see is just this general upward trend long term. And good, strong companies like Apple, if you look at Apple, Warren Buffett has made most of his money in the last 6 years off of Apple. He just bought a bunch of it, he sat on it, and he made a killing from it. He probably made a good 20 billion, $30 billion off of Apple or something crazy like that. So effectively, one of the things you want to think about when it comes to investing, this will be the last point, we'll talk about, and then I'll let you guys go until next week, is I always tell you guys that time is money, but time is more important than money. And time is the most important variable when it comes to investing. Why? Well, because time tells you, you know, how money grows. If you give something enough time, then it can grow into almost anything, especially if you're on the right trajectory. Like if I get in a car, even if it's a slow car, if you give me enough time, I can drive that car all the way to Los Angeles, right? So the speed of the car is not as important as, the direction that I'm driving and that I'm driving consistently. That's really what matters long term. And also, time isn't just important in terms of building wealth, because remember, I just explained to you guys, like, it's important to build in terms of building wealth. And another way it's important is, like, for example, if you show me any poor family in this country, if you give me enough time, they can become a wealthy family. The question is, what direction are you on? If you put them on the right path, like, okay, all right, so you're making minimum wage, take that little amount of money that you might have spent on fast food or whatever, do the $5 a day plan or whatever. You guys have seen this, and then in a generation, less than a generation, you'll rise up the economic ladder, right? So again, it's time mixed with trajectory. You have to be on the right trajectory. So you can't you have to let go of poverty mentalities and poverty culture, and you have to engage in wealth building culture. You do that, the right trajectory, give it enough time, they'll be fine. The other area that time matters, and I was thinking about this when I was in the shower, is that time is heavily connected to risk. A lot of what you perceive as risk, when they talk about risk in the stock market, a lot of it is heavily time dependent. And what do I mean by that? Well, if I know, here's the thing: if I know that the stock market is generally on an upward trend, and we have a really terrible 6 months, and the market just crashes and drops, and everything's bleeding and whatever. If I just shut my eyes and wait 2 years, it's gonna typically come right back to wherever it was. So everything that you were all freaked out about and nervous about that had you ready to bail out on your 401k, it goes away. And then you look back 2 years later and you're like, oh, look at this, my money doubled, or I have an extra, 50,000 in my account. So so risk, what we define as risk, and I'm not speaking to you as just some guy running his mouth, on the internet. I studied risk management, like under a guy named Renee Stoltz. He's one of the top 2 or 3 risk management experts on the entire planet. I edited a whole textbook for him when I was in grad school. Risk goes away typically if you have enough time, right? Um, so I think of risk like the way you think about like a rainstorm that's happening outside your house. If somebody says, okay, it's raining outside your house, are you going to get wet or not get wet? Well, it depends on how much time you have. Now, if you got to go to work in 5 minutes, then you're going to get wet because you're going to have to go out in the rain and to go to your car, right? But if you got time, you say, no, I'm going to sit in the house and watch football all day. I'm going to go out tomorrow. I'm going to go out Tuesday. Then you're not going to get wet. So the risk is like the rain. The rain doesn't hit you typically if you have enough time. Do you understand? Does that make sense? Give me a yes if that makes sense to you. I know it. I know it's a little bit weird and maybe different from what you might have heard in other places, but this is the revelation that I've come to. And so when you take time out of the process, a lot of risk just goes away. It just goes away. So one of the things they always recommend when it comes to investing is they recommend that older people invest more conservatively than younger people. Most experts will tell you that when you're young and you invest, like when you're buying stocks for your children, or which everybody should, every black person that wants to be wealthy and powerful and strong and financially capable, you got to buy stock for your kids. I'm so extreme. I feel like you're abusing your kids if you don't buy them some stock when they're babies. I am that hard about it. Like I'm pushing you that much. Okay. But they say that when your kids are young, they should take on more risk. Well, the main reason they can take on more risk than a senior citizen is just because of time. A senior citizen may not have enough time to wait out the storm. If the market crashes and it takes 5 years for it to recover, well, that 70-year-old may not have 5 years to sit around and wait for the market to get better. But a 5-year-old does. A 5-year-old can wait forever. They don't have to look at their stocks for 20 or 30 years, right? So if you take time out of the equation, a lot of risk just goes away. It's but that's really a metaphor for life. When they have terms like this too shall pass, you know, or just thinking about like living your life based on a certain set of principles where you're not worried about what's going on right now. You're thinking long term or whatever. Time when you take time out, it changes all of your decision making, right? So don't get caught up in what's happening right now. Stay focused on that bigger picture. If you can stay focused on the bigger picture, then you're going to make different decisions from people who are just reacting to what happened yesterday. And I can tell you the people that can see that bigger picture are able to do far better financially than people who get caught up in what happened at a specific moment in time. So time is powerful. Time is a very heavy financial concept. I spend a lot of time thinking about time, like everything from like I concluded, for example, that time travel is not possible. Like I think about stuff like that, and it comes from doing like advanced like mathematical stuff related to time and finances. And the best thing I would like to be able to do for you that I think I can offer you is that I can talk about these ideas in a way that makes sense. That's very simple, right? Like I love to break it down to analogies, but I think understanding things that way gives you a huge advantage over people who don't understand these things. So just be patient. This too shall pass. The market's down a little bit, but 2023, when you hit 2030, 2023 won't even matter that much. You won't even remember that much about 2023. Think about it. What do you really remember about 2017? What do you know this about 2017 that makes it different from 2015 or 2019 or 2018? It's hard to see that. It all kind of blobs together eventually, right? So 2023 is going to be that. It's going to just be a big blob. It's going to be part of this whole sequence of memories, and you're not going to be able to distinguish one from the other. So just focus on the big picture. I hope that helps. That's my last thought for today. And thank you for letting me express it. I know I was a little long winded with that, but it's an important concept that I think you should understand. Time and money are deeply connected, almost like brother and sister. So if you understand one, you should understand the other. If you understand them both, then you're gonna win. All right. So anyway, guys, I hope you have a wonderful day. Thank you so much for listening. Just a reminder, next week we're gonna do stock market investing class again next Tuesday. If you're in the Prime program, passive recurring income machine, where we do stock options, we're gonna meet on Friday night at 8 o'clock. I sent you all a text, so if you didn't get the text, check the login and you can get the access to the Zoom code. If you want to join us in Prime, just go to boycewatkins.com. There's a training called How to Make Money Without Working. That's where I explain everything that we do, and you can decide if you'd like to join us. It's a great way to make extra cash flow if that's what of interest to you. All right, so have a good day, everybody, and I will see you all later. Take care now. Bye bye.